Hello, and thanks for joining me on episode 3 of LOQPOD. Today I'm joined by Customer Director from Vanquis Bank, Tom Allder. Today we're going to be talking about financial inclusion and how banks like Vanquis use data and what the future of the market could look like. Tom, thank you very much indeed for joining me this morning on LOQPOD. What I'd love to do, first of all, is just to get to know you a little bit. So could you give me a little bit of background to yourself and how you started at Vanquis, please?
Sure. Thanks, Katy, and thanks for having me. So I've been at Vanquis now for 2 years. Actually, my 2-year anniversary was just a couple weeks ago. And I've worked in financial services really my whole career. In fact, I started in financial services when I was only 17 years old back in my native Canada, working at a bank branch and have worked in financial services ever since. I spent a lot of years in credit cards and lending. I've worked at a couple smaller companies as well in the mortgage market and in the personal loans market, focused on digital marketing and proposition development and branding and all those sorts of things in financial services. But joined Vanquis 2 years ago, really for a number of reasons. One is I really like the product and the categories that Vanquis participates in. And I just believe very strongly in the mission of the business in terms of the customers that we're trying to help and serve, and the opportunity that's there within that customer segment. So I've been really excited to be part of that over the last 2 years.
And you mentioned the mission there. Tell me a little bit about it, because it is a really interesting one. It does seem that you guys are a little bit, can I put it this way, customer obsessed?
Yeah, I think we are customer obsessed, and it's something that we get more and more so every day, and it's part of my mission actually to make sure that that's part of the culture of the company. So we look constantly at customer feedback, whether that's on Trustpilot or various tools that we have internally to look at feedback, and we try to understand root cause of issues that might be causing customer dissatisfaction and try to work through ways to improve that. And we really believe that, even though our customers are often not from the most affluent slice of society, that doesn't mean they should accept inferior service or inferior propositions or inferior products or services. So we're very keen on making sure that our service and our proposition for customers stacks up against anyone that's out in the market.
And, that's quite interesting. And we'll get on to financial inclusion in a little bit, actually. But just while we're talking about your customers, what is a normal or an average demographic of a Vanquis customer? And I suppose a follow-on question from that is, have you seen a lot of change in your demographic, certainly with the pandemic?
Yeah, so our customers are really like, the neighbors on your street in many cases. So they are almost all employed or self-employed. They tend to be skew a little bit younger. So we've got a lot of customers sort of under 40, between 25 and 40, although we do have some older and younger customers as well. They work in a very broad cross-section of industries. So whether that's healthcare, teaching, hospitality, retail, a lot of self-employed actually. So we have a lot of taxi drivers or lorry drivers and things like that in our customer base. So it's quite a broad cross section. I think what they have in common is really this desire to join Vanquis and start on a path to improving their financial well-being. So that's the common thread that links between or amongst all those different customer segments. It's a big segment really. So across the UK, we really feel like there's somewhere between 6 and 10 million customers who could kind of comfortably fit into our proposition and what we're trying to do for customers. And that's really customers who, for whatever reason, find themselves, we're going to talk about financial exclusion, but find themselves with a little bit fewer options than really they should have in terms of what is available to them from a credit and even a savings or other types of financial services product perspective.
Yeah, that makes sense. And I suppose, with I mentioned briefly earlier, the global pandemic has obviously had some really interesting effects on people's finances, personal finances. I've been reading quite a lot lately about people that are actually, they have more savings, more disposable income because there's less outgoings. But equally, a lot of people have lost their jobs and find themselves in a really tricky situation with their personal finances. Have you guys at Vanquis seen much of a difference?
Yeah, so that's exactly what we're seeing as well. So we're seeing a bit of a polarization. So there's some people in our customer base who, because they're able to work from home or they're in industries that have sort of continued operating all throughout the pandemic. So whether that's healthcare as an example, key workers, essential service workers, etc. Many of them are finding that they're actually able to put away a little bit more money right now than they have historically, largely because they're not buying restaurant meals, they're not traveling as much, those sorts of things. And so, in some ways, you're seeing customers pay down debt, which is always a good thing. But on the other side, you do have those customers who are really being significantly impacted. So often they're working in hospitality or retail industries, or they're self-employed. Those are the ones where we're seeing they're still on furlough or they're working reduced hours, and many of them are finding this a real struggle right now. And I'm sure they're very, very interested in how the economy is going to open up in the next few months, and hopefully they'll get back to the full employment that they had prior to the pandemic. But it is very much a polarized market at the moment, with some, as you say, paying down and some finding it a real struggle.
Yeah, it'll be interesting to see how it changes over the coming months and years, actually. And Tom, I'd love to kind of move on to financial inclusion, because I know, you guys at Vanquis and also, us at Lockbox as well. It's something that's really at the heart of both of our businesses. What's your view on financial inclusion / exclusion? If you could kind of give me a bit of your thoughts on it, really.
Yeah, so I think it's an interesting concept, and I think the main part of the way that I like to think about it, and probably at Vanquis you like to think about it, is it's really a journey for customers. So and the journey really begins with, like every journey begins with the first step, which begins with getting some form of credit, which then allows you to build your credit profile and credit score, which then opens up a whole world of opportunity to you. And so that kind of inclusion piece is around allowing people that opportunity to get to where they're fully participating in society, frankly, as a result of having access to more financial products and services. So, what we would say here is, obviously the end goal for many, many people, for example, might be to get a mortgage for a home. And that's maybe many years in the future. But the reality is that unless you're able to build up some kind of credit profile and demonstrate an ability to manage debt, etc., it'll be very difficult to ever reach that goal. And with segments of society unable to even take that first step, those other life goals become further and further away and more challenging to reach. So for me, financial inclusion is around putting the right products, propositions, services in place for customers so they can begin that journey and that step, which will open up things to them in the future. And not just open up things, but they open up things at the right price, so they don't end up paying too much for financial products and services. There's always been in the financial services market, I think it's called sometimes a poverty premium, where oddly enough, the people with the least means end up paying more for financial products and services. And then as soon as you get lots of money, then things become much cheaper for you, which is a challenge that I don't think the industry has fully addressed yet. But I think the main point is trying to get people included in that system, improving their credit profile, improving their credit score, which will then bring access to more products and services at lower prices over time. And you can just think of, an example I would give as well is that, depending on where you live, having a car would greatly open up employment opportunities for you. But to get a car, most people need to get financing for a car. And if you're financially excluded, then you can't do that, which means you have to find the cash to be able to pay for the car, etc. And all those things just start limiting people's life options. So I think financial inclusion is really about minimizing those barriers for customers and just general people in society to be able to get on that path to get to that access to and participation in society fully.
Yeah, I completely agree. It's quite interesting though, because I suppose as an adult participating in the financial system, you, as you quite rightly say, you kind of have a physical goal in mind first before you end up on that financial journey. But I suppose, personally for me, I don't feel like enough's done at a lower level. So, as a teenager in school, you're not told about your credit report. You're not told about, the responsibility you have upon yourself to kind of build that model. Is that something that we should be doing more in the UK especially? Have you got any other ideas around, how we can help people to kind of empower themselves before they get to this point of need, I suppose?
I think absolutely it's an area of education that, with 3 children myself and all in high school and heading soon on to other education and university, etc. I think they're lucky because within our household, at least, I'm able to talk about these things and give them that kind of education based on my background. But there's nothing really in their courses that really prepare them for becoming, savvy with money. And you see that so often. In fact, people, as they first get access to credit, whether that's overdrafts or more recently buy now, pay later services or historically credit cards, etc. It is at that young age where they make mistakes, which can actually set them back quite substantially in terms of their journey. So, so I think anything that can help younger people start from the right place in terms of understanding, it's okay to borrow money for certain things, but make sure you have a plan to pay it back appropriately, and make sure you understand what the cost of that is, and make sure that that you don't put yourself in a position where you're going to damage your future prospects. And I think it's just something that we kind of ignore generally and just assume people are going to learn on their own. But too often, I think that ends up in a tricky situation for people.
Yeah, you're absolutely right. And I suppose it's a bit of a loaded question, I suppose, but do you think we'll ever see an end to financial exclusion?
Well, I think it's within our grasp. So can we completely see an end to it? Possibly not down to absolutely zero. But if you think of an ability now to use things like open banking to be able to, feed into more information to that decision about who may be able to apply for credit, which has long been driven by information solely on credit bureaus, etc., and ignored things like, let's say rental payments or utility bill payments as an example of someone being responsible and making their payments and commitments. I think all of that will help us be able to minimize financial exclusion in the future. I think there's a lot of innovation happening, Lockbox obviously being an example of that, in this space to try to find ways to help people begin that journey. And before, I think there was just far less of a concern about trying to widen that access. It was very much, available to those who had relatively high, steady incomes and had sort of demonstrated a strong track record of payments in various forms of credit. And now I think we're finding new ways to use data and new products and propositions that I think will reduce financial exclusion down to a much lower level. Will it be eliminated completely? I think that's a goal we should all strive for, but possibly not completely. I think you'll always have challenges for people. For example, moving countries is a challenging one, and how do they bring their history with them? I think that's something we can work on solving, and we should be able to solve. But that's one where clearly that becomes a bit of a challenge for including people who are new to country into the financial system. But I think it will get less and less, and I think there's solutions out there that are starting that will hasten that reduction in financial exclusion.
Yeah, that's fascinating actually, because people moving country, especially, that's a huge issue, which I think we could have a whole episode on that at another time actually, Tom. But I'd be you mentioned data there, just in your answer there. I'd love to know a little bit more about kind of how Vanquis uses data to make decisions, for example, on onboarding a customer. Is it something you could maybe shine a light on?
Yeah, so I mean, obviously, we're a very, very data-driven company. We have to be, because we're operating in a space of the market where we do take on more risk than, say, a typical bank in deciding who should get credit and how much they should get. I think we use a lot of the traditional sources of data that we've mentioned before, such as bureau information. We develop sophisticated scorecards to understand, based on a person's profile, whether they're likely to be, the product that we're offering is appropriate for them and responsible for them to use, how much credit limit they should get, for example, how frequently we offer them an ability to increase that credit limit, how frequently we offer an ability to reduce their APR on their product based on their behaviors. So we're constantly reviewing and assessing all those things to kind of tweak and optimize them with a couple purposes, right? So there's clearly a commercial purpose, as a for-profit company and as a bank. We have as a part of a publicly listed company, we have an obligation to shareholders to drive a commercial return. There's no question about that. But it's also, how do we ensure that the customers that we approve get the right outcome is as important as the commercial outcome. So we look at all that information about previous behaviors to try to make those decisions. More and more, we're relying on as I mentioned before, things like open banking to help us enhance that decision process. It's something that emerged in the UK several years ago, and I think really just in the last year or so has become a much more powerful tool for customers and for companies like ourselves to just make sure that we're making the absolute right decisions for customers, and customers are getting the best chance to get the best product they possibly can as well. So that's emerging more and more. We, as I said, we constantly are evolving and reviewing customer information based on behavior that we see. Where are they transacting? How much are they transacting? Are they making minimum payments? Are they making more than minimum payments? And how do we tailor what we're offering to them based on that information? It's an ongoing process.
Yeah, and it's great to hear the agility within the credit market as well now. And I think, that's constantly evolving, generally with financial technology. And with your experience, Tom, over the years, how have you seen the credit market change? Have you seen any big dramatic changes within it?
Well, I mean, it's interesting because in some cases, it feels, having worked in it for a long time, it does feel like some elements of it are quite similar to even 20 years ago. A credit card is still fundamentally a credit card. It has an interest rate, it has a credit limit, etc. And so, many ways on the surface, it looks very similar. But what I think you've seen is some changes within that market and changes more broadly in that. You have, frankly, you don't really need plastic anymore to operate a credit card. You can work through e-wallets quite handily and make payments on your mobile phone. So that's a big change, I would say. Everyone still issues plastic, but you could certainly see in a few years where that becomes an optional part of the relationship as opposed to something that's core to it. You've seen a lot of new products come out recently. In some ways, they are old products sort of updated for a digital age. So the buy now, pay later services like Klarna, etc., which have taken off and become a very successful way to allow people to spread payments. They're based on an old model. I mean, often historically, you could go to a department store and buy something over time, etc. So it's not necessarily new, but it's updated and more slicker and better user experience for the digital age. I think what you are seeing is a shift, especially among younger customers, towards their attitude towards credit. So one of the things, the piece of data that I've seen, and I can't remember the exact percentages now, but the sort of 18 to 25-year-old segment is much less likely to want to have a credit card now than they were 10 years ago. And I think part of that is a challenge for our industry in particular to make a compelling reason why that form of borrowing can be important and valuable to them. And as they've drifted towards more things like buy now, pay later, there's this real need, I think, for us to reassert, I think, the value of the flexibility of a credit card and being able to pay that over time and smooth out cash flow challenges that you might have. So I think there's a shift definitely in the younger audience there. There's a shift towards digital. I think there's been a lot more regulation in our space as well, especially coming out of the last financial crisis. There were a lot of practices within the credit card market which were arguably not designed to have the customer's interest at heart, and a lot of those have changed in the last 10 or 12 years. So I think it's a better market for customers. I think it's a more digital market. I think it's a market where young people are choosing to borrow in different ways than perhaps their parents did.
Yeah, so not just technological advances, but behavioural changes over the years. And how do you see that evolving in the future? I mean, I'm asking you to look into a crystal ball, which is one of my favourite things to do. But anything that's on the horizon that you think we're going to see a massive shift change within the market?
Well, I mean, I think what we'll see is a continuation of some of the trends we've seen more recently. So I do think this essentially your mobile phone will become is already becoming for many people, but will continue to become the core way in which you transact and interact with financial services. So you will see that continue. You'll see more and more of payments and transactions going through that device. So that's going to continue almost certainly. I think you're just going to see more flexibility around credit products. So you'll be able to do things like within the same credit card product, choose to pay off in installments as opposed to make sort of your regular minimum payments. You'll be able to choose to sweep some of that balance over to a loan potentially. You may be able to, I think what we'll also see actually is using some of that open banking data and credit information, people will be able to know more instantaneously if they're getting the best possible deal they could get. And so you're going to see, I think, coming back to the financial inclusion point, this customers more empowered to manage their financial services relationships and get, when I say the best deal, I mean really the best ability to get credit at an affordable cost to them based on how well they performed on those credit products. And I think historically there was a little bit of, it wasn't an intention to keep customers in the dark, but customers just simply didn't know whether or not the deal they were getting is a good one. But now you have services like ClearScore, which alongside understanding what your credit score is at any one time, they'll also be able to tell you what products you're eligible for at any one time across the whole market. So I think that really speaks to a challenge for, it's a good thing for customers. It's a challenge for players in that market just to be on top of their game and making sure they're offering the best value possible to customers.
Yeah, and just while we're kind of talking about the future, I'd be really interested to know if you've got any predictions on how social media and digital identities might impact the future of the credit market, because we're hearing a lot about that at the moment, and certainly with the Khalifa review that came out recently, that seems to be a big focus on the future. What do you think the impact will be on our market?
Yeah, I think it's I'll be honest, I think it's a bit of a tricky one, because I think certainly 4 or 5 years ago, that held great promise, as in you could use people's data from Facebook, for example. Are they friends with people who are low credit risk, and therefore can we infer that they might be low credit risk, and those sorts of things. And their LinkedIn profiles and their Twitter profiles, et cetera, and crunch that data through and build models around it and see what's predictive. And so that held a lot of promise several years ago, and I think it still holds promise. There's no doubt. But I think there's been equally a growing lack of comfort with that data being used by financial services firms, especially in a way that potentially isn't as transparent as we'd all like it to be. So my view on it, and I could of course be wrong, is I think the jury's a little bit still out on how we'll end up using that information. I think whatever happens, I think it will need to be based on the customer willingly and knowingly accepting that information is going to be used in that way. And in some cases, of course, it could really benefit the customer. But what you don't want is the potential negative impacts of that information getting into the wrong hands, et cetera. So I think I'm cautiously optimistic that we'll find a solution that works for both customers and companies in this space. But I think there's probably more caution about it than there was a few years ago.
Yeah, that's a really interesting view on it, actually, Tom. Listen, thank you so much for your time today. I've really enjoyed our conversation. It's been great to kind of pick your brains on all things from Vanquis to the credit market and financial inclusion, but it's been an absolute pleasure. Thank you very much for joining us today.
Thanks, Katie, and happy to chat and speak again soon, I hope.